What is going on, everybody? It's Stas here. So the stock market had a pretty strong day today. S&P 500 up 11 points, up 0.3%. Dow Jones up 46 points, up 0.2%. And the NASDAQ hit another all-time high today, up 1.4%, up another 160 points. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm looking to buy as we're getting deeper into August of 2020. And I also want to go over some earnings reports, what I've been doing here in the markets as of late, as well as my thoughts in general in the crazy stock market that we're currently experiencing. So if you guys find value in the video, hit that like button for me, consider subscribing to the channel, and very important, follow me on Instagram at StasSurfS if you guys want to see updates throughout the day. I'm pretty active on the stories on Instagram, so follow me there at StasSurfS, and feel free to join our free Discord and Facebook, link down below in the description box. You can also get 2 free stocks from Webull, link down below as well. All you have to do is deposit $100 and you get 2 free stocks on Webull, and I also get 2 free stocks since it is an affiliate link. So take advantage of all that, link down below, and let's get right into it here, starting off with the S&P 500. And you guys know the S&P took a bit of a hit yesterday, right? We took a hit across the markets, a double top here at 3,400. We did hit an all-time high yesterday too, but we double topped. We took a hit earlier today, right? And actually yesterday, obviously, after that double top, we dropped about, I think, 50 points, I'm exaggerating, about 30 points here on the S&P, and that drop from yesterday continued into today, but ultimately we held 3350 here on the S&P 500, which if you guys take a look on this 4-hour chart, I mean, we've talked about this, right? We kind of, not saying we called it out, but we did talk about how the S&P, if it were to break 3370, it's likely to go down towards 3330, 3340 in general, right around that 50 SMA here on the 4-hour chart, and it did exactly that today, right? We pulled down, held that 50 SMA, and we rallied into the close, ultimately pulling out. We squeezed out a green day somehow because, again, the markets were down a decent amount earlier. The S&P pretty much recovered all day, broke 3380. We also broke 3390 about 20 minutes before the market closed, but we failed to break or actually hold above it in the close of the market. So on that note, I'm looking to see tomorrow if the S&P is able to break 3390. If it is, that's going to be a one-stop shop for it to test back up to that all-time high around 3,400. So watch that here on the S&P 500. Overall, it seems like we pulled down, and ultimately we're recovering right now. We'll see if that ends up lasting into tomorrow. And the Dow Jones here, it seems like we are confirming a hold on around 27,500, which we've also been calling out here on the channel. And if we go here on the 5-day, 5-minute, we literally held it like clockwork, right? We held it like clockwork. We pulled down, 27,500 hit, lower low hit in the downtrend here, and we recovered. And one thing worth noting here is the Dow is still on a downtrend, guys, on this 5-day, 5-minute at least, right? It's still on a downtrend, so watch out what happens here on this 180 SMA tomorrow, this gold line here on the 5-day, 5-minute chart. If that breaks, if this overall downtrend breaks, that could be a sign that the Dow is tuning up to rally back up to 28,200, right? If this overall downtrend breaks and we do something like this, right? Take a look at my trend line that I'm drawing now. That could be a pretty big move in store for the Dow Jones, and we'll see what ends up happening, right? And if 27,500, let's say we go back down to test that tomorrow to hit a lower low yet again in this downtrend pattern, you know, on this hourly chart that you guys are seeing, we might end up breaking it, and let's say we do, we might be going back down to 27,000 to about 27,200. Those are a couple of levels in general here on the downside that I am watching. And when it comes down to the NASDAQ, what else can I say about the NASDAQ, guys? I mean, all-time high after all-time high, it's just doing its thing. Tech stocks today were very strong. Apple up $10, Amazon up $40 today almost, Facebook up $6, Google up $34 today, Microsoft up $5, and Netflix up about 13. And we all know these are the stocks that are the anchor of the market. They're about 20% of the market here, the S&P that is, and they carry the market overall. And if they do well, typically, obviously the NASDAQ does well, and the markets in general do well, especially the S&P and the NASDAQ, right? So at this point, all-time high around 11,500 here on the NASDAQ. And if we end up pulling down, I mean, at this point, we could go either way. I mean, we're not extremely overbought. We're by no means oversold. So this could go either way. But I'd watch and see a pull down. An area we might hold is this 50 SMA, this green line on this hourly chart, maybe around 11,400 to about 300, but I wouldn't be surprised if we ripped up even higher, maybe 11,550, 600 here on the NASDAQ. So again, it really could go either way, but ever since we broke 11.3, we called that out in last week's videos, right? This thing has been on an absolute tear. So let me know down below, guys, what are your thoughts when it comes down to the market? We are looking very bullish, but like I've been saying, guys, markets at this point, yeah, it's all sunshine and rainbows, although it doesn't reflect the actual economy. Economy's crap still, but the stock market's all sunshine and rainbows, but don't let it get to your head. Do not let it get to your head. Stack up cash, have reserves ready to go if something happens. If the markets crash, you have ammo, dry powder ready to go. And if you're up a lot on a position, don't get in this euphoria stage of being greedy. Go ahead and maybe lock in some profits. That is where we could be at this point. Yeah, the markets could go higher, but we've run up so much in the past couple of months that taking profits, especially if you bought some stocks in the dip back in February, March, April, whatever, taking profits, it's not a crazy thing to do. I mean, no one ever went broke going and locking in profits, right? That's what I kind of like to say here. So let me know down below in the comments, what do you guys think about that? And for me today, I didn't do much of anything different. We'll go over what I'm holding, but it's much of the same. A bunch of gold ETFs. I'm holding GDX. I'm holding GLD. These are two gold positions that I do have here on the weakness that we've been seeing in gold. Gold overall went from 2,100 to about 1,900, held the uptrend on this 180 SMA a couple days ago. Now again, we pulled down today, down about 1%, down 15 points on gold, and we are holding a higher low, the uptrend again. So, I mean, this could be a point where gold breaks out. So overall, I'm bullish gold. I'm bullish GDX, which is a gold miners ETF. I'm in that one. And I'm also in GLD, which is an ETF that tracks the price of gold strictly, right? So I'm still in those positions. CLX and Upwork are my two, I guess you can say, my most exciting positions, or let's put it this way, the positions I'm most excited for that I think have a lot of potential. I'm in CLX, which is Clorox, right? And I'm in this one at about 226.80. So I think there's a lot of potential from here, especially above 230. If that breaks, I think it could go back up to the 240. So I'm viewing this more as a couple of weeks of a swing trade if all goes well. CLX, that's kind of how I'm viewing that one. And Upwork had a fantastic day today. This is definitely a stock that is one that I want to add more to. Despite going up 4% today, I think it can go up a lot higher. I mean, we broke out of $15. That was big. I've been talking about this a lot recently. You guys can see it here on the 4-hour chart, and even better here on the hourly chart. I mean, that's very bullish. We broke $15.10, $15. Now the next resistance we're about to test is $15.75, and I think I'm going to give it a little bit of room there to test $15.75. And if it does and breaks, that is where I might add some more money here in the momentum. Because if you guys haven't been watching my channel here, I've been in Upwork for a couple of days, right? I've been calling it out, and I've been in since the low 14s. And, I'm up. I have a pretty solid cushion of profit built, so I'm not looking to buy quite yet again. I'm not looking to just shove money into it, and I'm just being a bit more kind of not cautious. Well, I'm always cautious, but a bit more precise with my entry points and sticking to my targets. So 1575, if that breaks, that's where I'm looking to add. And Netflix did very well. We talked about tech stocks. Netflix up $13 today, and Netflix is one position that I've been in for a while, and now I'm finally back in the green. I'm in at about 495, 496. Today we closed at about 498, and this is a recovery that I'm loving. And honestly, I'll throw Netflix in that group of stocks I'm very excited about. Netflix, Upwork, and CLX are probably my top three at this point when it comes to swing trades. Workhorse as well, but that one's a bit more risky. Obviously, it's a bit more speculative, but Netflix, yeah, I think it has potential to get back up above 500. I mean, we're pretty much seeing that breakout right now. We've held 470. We called that out. That was a very good sign. We broke moving averages today, both the 180 and the 50 SMA here on the 4-hour chart. And it seems like we're getting back to the 500. So a couple of levels to keep an eye out for are going to be the August 5th highs at about 510. That could be where Netflix ends up rallying to either tomorrow or maybe sometime next week. And I'm also in FSLY, which, guys, it's back from the dead. Finally, FSLY, Fastly. This one saw a bunch of tension as we got news around, the TikTok deal, TikTok tensions, and so forth. This stock went down from where I bought it at $91 all the way down to the mid to low 70s, guys. So I was in the red a good amount there. I didn't cut my losses. I said I'm going to ride the volatility, right? And that's exactly what I ended up doing. And it paid off because now as the TikTok tensions are kind of alleviating a bit, we're seeing Fastly rally back up. We're seeing Fastly rally back up from $80, 75, $80. We held that strong level of support. Now we're getting back to my cost basis around $90 to $91. And am I adding more to Fastly at this point? No. I might add more, though, if we're able to clearly break out of $90 and quite honestly get above my cost basis around 91. So if we're able to break 95, maybe I do add a little bit more there on the momentum. So overall, guys, that's what I'm doing. I mean, I'm in a lot of the same swing trades here, and a lot of them are finally starting to turn up here. So this is good. This is very good stuff. And Workhorse, again, I'm in this one. More of a long-term play, longer-term swing here. And again, it's a bit more speculative, kind of riding on the USPS contract, depending on how much it gets. But either way, a lot of people are saying, hey, if they get any of it, it's going to be a win either way. So let me know what you guys did down below in the comments. Now let's talk about some earnings reports. We had Alibaba today, was the star that everyone was watching. Big Chinese company here. We had JD do well about a couple days ago, so that kind of set the standards high for Alibaba, let's say. And Alibaba ended up going down about 1% today. They reported EPS of 14.82 RMB, and revenue came in at 153.75 billion RMB. I believe both of those ended up beating, and the stock didn't do much. I mean, the stock, again, down about 1%, didn't move much on this earnings, and that could be because either the earnings are a bit underwhelming, maybe the investors and traders out there were already pricing in this earnings move, and it's just not moving. I mean, we saw how Target moved yesterday. Target moved like crazy because people weren't expecting that massive beat and the crazy earnings report that Target had. Yeah, people were expecting a good earnings report because many people have been forced to shop at Target, Walmart, all these big corporations due to small businesses being closed around the country. At least here where I'm at in New Jersey, guys. I mean, to put it nicely here, a lot of small businesses here are screwed, and it really sucks. And it's still happening here in Jersey, all these shutdowns and of these small businesses. And quite honestly, that's what forced people, obviously, to go shop at these big corporations and doing curbside pickup and so forth. And it made their earnings incredible to the point where it shocked investors. And that is why the stock went up 12% yesterday. So, that is kind of what's going on. Baba, solid earnings, but the stock's not moving. And again, on the flip side here, Target, Lowe's, Home Depot, these are stocks that are moving quite a bit. Well, actually, take that back. Target's moving quite a bit. Lowe's and Home Depot are kind of just chilling still a little bit. But overall, that is it when it comes to recent earnings reports. Pretty much just Alibaba for today, guys. And one to keep an eye out on for tomorrow is Foot Locker. Foot Locker on a technical basis here clearly got rejected under $30, right? We're trading down at about 27 now, which happens to be a pretty big support stemming back from a couple days ago. If you guys take a look here on the 30-minute chart, you guys can see a couple weeks ago, and quite honestly, about a month ago, we held $27. So this could be a decent opportunity maybe to get in, but me personally, I don't like gambling on earnings, so I'd wait until after. But we already understand that Foot Locker is going to have a pretty decent earnings. We got some news a couple days ago how same-store comparable sales were up about 20% in the second quarter. They're looking to squeeze a profit out as well of about 60 cents of EPS. So it shot up to 35 on that news and sold off from there. So that's kind of why investors and traders are excited, because around a 22% window has opened since that drop. And if they report solid earnings officially, it could shoot the stock back up. We'll see what ends up happening, but overall, Foot Locker is for sure one worth watching. And a bunch of other ones here. Visa. This one, guys, is back to life as well. Maybe not back to life fully like Fastly was, but Visa's back to life because it broke out of a resistance. We talked about it yesterday that it's been under since the middle of May. That was about 3 months ago now, guys, and that's a resistance at about $199, $200. And now it seems like it's picked direction. Bullish momentum is coming in, and we're on a full ride, a one-way ticket up to 209, 210. That's kind of what I'm seeing right now when it comes to Visa, and I'm sure many of you all can agree if you're looking on this 4-hour chart here. So honestly, I didn't get into Visa, guys. I might tomorrow, but it's on the watch list. And if it pulls down anywhere in 202, 203 level, we retest that support, new support here, old resistance, and we hold it. That is going to be a point where I strike on Visa. And INTC, we got some good news yesterday, and I don't know if it's good news. Well, it depends on how you're viewing it. A lot of people hate buybacks, but some people love buybacks. And typically, it shows confidence in the management of buying into a stock. If they buy their own stock, that means, hey, they might think it's a cheap valuation. And Intel actually did that. They did an accelerated $10 billion stock buyback program with CEO Bob Swan saying exactly what I just said. The shares were trading well below our intrinsic valuation. And get this, guys. If the CEO is saying that, is he... he could be not saying that he's lying just to get you guys to buy. I'm not saying that, but could he be saying that just to say it and maybe try and get other people to have confidence in Intel? Sure, but quite honestly, I don't think he's doing that because the stock is beaten down, and long term, it very well could be below the intrinsic valuation if you guys really run those numbers and do a deep financial dive. So I don't think he's just saying that to get people to buy in. Clearly, they're putting money where their mouth is. They're buying their own stock. They're going to do a $10 billion accelerated buyback program. So we'll see if people start following this. I've been saying this for the past couple of weeks here with Intel that it's worth watching. That this could be an exaggeration from 61 to about 46, that massive drop, and it could rally from here. Not saying it's going to rally. It's going to take time, but there could be some sort of recovery. So watch out for Intel for this recovery. And obviously their shares have been under pressure since the company said it was about a year behind on a shift to next generation 7 nanometer production technology. So if you guys have the guts to hold this one for at least a couple of years, this could be an opportunity. And NVIDIA is another one worth watching. They reported earnings yesterday. They're about still $15 from their all-time high at about $500, and they had a pretty solid earnings. Adjusted EPS $2.18 versus $1.97. Revenue came in at $3.87 billion versus $3.65 billion. And yeah, we're not off the highs by a lot. We're still very close to all-time highs, but a move can still be had. It's about 3% from where we are now to all-time highs, and let's say this thing continues to rally, it could obviously go higher and more money could be made. So watch out for NVIDIA. Another one like that's rallied a lot, and I'm not looking to chase it, but I'm still watching it, is Adobe, ADBE. Adobe hit an all-time high, I believe, today, up 4%, almost up to almost $480. So I think it's worth watching. If we pull down, consolidate, show any signs of weakness, we could end up buying in on the upwards momentum. And another one here that's pulling back on solid earnings is Walmart, ticker symbol WMT. This one's down about 1.3% today, down about $15 from that high about a couple days ago when they reported earnings, and their earnings came in, get this guys, 1.56 EPS adjusted versus 1.25. So they beat by a big margin on EPS, and revenue came in at $137.7 billion versus $135.5. So not as an impressive beat on revenue, but nonetheless, it was a double beat. And Walmart, I'm just looking to see if it finds any sort of support around 130 on this 180 SMA. I think this could end up being a pretty solid swing trade. So I'm looking to maybe buy into this one. Beyond Meat showed a sign of a 130 break today, but it failed to hold. We almost broke 130, but ultimately the downtrend is still intact. You guys can see here on the 180 SMA resistance on the hourly chart. We're struggling under that, and overall on, let's say, this 90-day chart, we're still holding this downtrend. So let's see if 130 can break on beyond. I'm being patient with it, and honestly, I need to see 135 break, and from there, that is where I think a lot of bulls will be able to push this thing higher. And the last two stocks here that we're going to talk about, Uber and Lyft, guys. Uber and Lyft, they're under a lot of pressure. We just got news, that California, and I think California is the biggest market for both Uber and Lyft since they are a massive state, heavily populated. We saw how they're looking to take employees on Uber from, well, not employees, contractors, from independent contractors to employees. And this really hit the stock of Uber, and they were looking to shut down in California, at least, for I don't even know, it wasn't an extended period of time or whatever. And we just got news that California appeals court allows Uber and Lyft to classify drivers as contractors while court considers the case. And on that news, Uber's up 7%, up $2 a share, and Lyft, on the other hand, let's see how much that one went up, about 6%, up $1.60. But still, guys, it's still downtrending. It's still at a point where we could very well just get rejected and continue the downtrend from here. So I'm not looking to chase Uber and Lyft, but still it's worth looking at maybe as a recovery play at some point in time. And one thing worth noting, guys, this is a sigh of relief for Uber and Lyft in the short term, but it's not over yet, because what happens if the court comes and says, you guys have to classify your worker or your drivers as employees and so forth. You can't drive in California, whatever. What if something like that happens and it just drops back down? So that is why you have to approach Uber and Lyft here with caution. And overall, that's it for this video, guys. I hope you guys found value. We went over a bunch of stuff, stocks I'm watching, looking to buy, what I've been buying, where I'm putting my money right now, and in general, some thoughts on the market. And I'd love to know now your thoughts. Let me know down below in the comments, what are your thoughts on the stock market? What stocks are you buying? Where do you think we're headed? And if you don't mind, hit that like button for me and consider subscribing. Make sure to turn on that notification bell so you're notified every time I make a video. And don't forget to follow me on Instagram at StockSurfFest for updates throughout the day. Every single day I post on Instagram, guys, so don't miss out on that. And don't forget to claim your 2 free stocks from Webull, link down below in the description box. Those are valued up to $1,400. All you have to do is deposit $100 into the account, and you get your 2 free stocks after a couple of business days, valued up to $1,400. So go take advantage of that. Free money, link down below. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.